Usoro, thank you so much for joining us.
Thank you for
Things
having
have
me.
changed clearly as we saw the end of the month. After a very solid start, we saw the sentiment really change. And the big question is, as the market is declining right now, is it the time to buy into a dip, or has anything fundamentally changed, especially with the banking sector? Because as I mentioned earlier, the banking stocks are dragging the market lower today.
Yeah. So the fundamentals have not changed. We've said that clearly. For the fundamentals to change, it would mean that things like our outlook on GDP growth, quote unquote, that would change.
But the outlook on some sectors like the banking sector could have changed. And given what everyone is expecting with the security fixed income market this year,
yes.
there is a sense that earnings will be under pressure.
Yes, earnings will come under pressure because I think it first starts with an elevated interest expense, because most of these banks, to plug the funding that the CRR is effectively taking out, most of these banks will have to reprice maturing placements. And given where we see rates at, it would be difficult to reprice for most of the banks, excluding banks like GT Bank, who has a very low cost of funds. But it would be difficult to reprice placements without affecting your cost of funds in general. So from that aspect, it means that there will be pressure on interest income because interest expense will go high. But the general atmosphere is that loan rates are coming down. We have seen revisions. We've seen banks send out messages offering loans as low as 15%. So we're seeing a marked decline in the rates that are going to go out. So yields on assets will contract. Net interest margins will also come down. But you have to look at the other angles. For banks that are able to expand loan book, the addition of loans as opposed to treasury assets on their portfolio should be able to support asset yield. And then also we do expect that non-interest income will still outgrow interest income this year. So banks that are not in a position to take any huge FX losses this year should have fee commissions and trading income support the results. So it's not that bad. It's not as bad as some other sectors.
Well, the month of February will certainly give us the opportunity to assess how well banks did last year
Yes.
as the earnings season really kicks off. But what are your expectations for that, and what will be the likely impact on the market? There has been that sense that because of the flight to equities
Yes.
from fixed income securities that
Yes.
are obviously yielding or much less,
Yes.
and the attractiveness of dividend yields, that could prop up the market in the first quarter even further. Would you agree?
Well, yes and no. So yes, by the market we've already seen that reaction. I don't know how well people expected the market to do, but at some point in January, the market had gained over 10% year to date. You had seen some of these stocks give you year to date returns in excess of 20%. So there was a small rally, although it was for a short period of time. I don't know whether people expected it to last that long. And even when you look at the current dips we have, the current dips put these stocks still below their 12-month lows for 2019. So these stocks are not as low as one would think. Then you look at the broader picture, the macro picture. Brent crude is under pressure right now. There are fears because of weakened demand from China with the coronavirus and things. The global outlook now for growth is threatened. So that should also be a bit of a risk factor that any investor should take into consideration now.
Right.
So going towards the dividend payment period, what we've seen is a lot of results have come out and all of them are unaudited. First time we've seen, just to beat the NSC deadlines and the fees. But what that means is you need a double reaffirmation on these numbers. Because we do know that in some cases, when the audited numbers come out, you will see material differences to the unaudited figures. So it is a time for caution, and you probably want to wait for some of these stocks to go a bit further down before you buy.
All right. Well, thank you so much for coming in and sharing your insights. Clearly, we'll be watching the markets closely this month. Usoro Essien is head of research at Vetiva.